All right, guys, what's going on? Happy Friday. We're going to be doing a Friday market recap today. And if you guys are watching this at a later date, again, I really do appreciate you guys for being here. It's been a pretty interesting week. Markets have definitely moved. We did see a slight increase in volatility. And you know what we're going to do again is just go over our major pairs, really take a look and see where they went, from Monday till Friday. We're going to close here in just a bit. And that's just going to give us a general idea as to, where potentially markets are going to continue to trend, maybe even into next week. All right. So I'm going to let you guys pour in real quick. Let me know if you guys can hear me, and we'll get things started. All right. Yo, what's up, Jay Hill? Good morning, man. Let me know, guys, if you can hear me real quick, and I'll just get things cracking, and we'll hop right into it. Cool. Okay. Here we go. All right. So, all right, guys. So what we want to do today, again, is Friday market recap. All right. So these are really important for everybody. And I'm sure you guys, or at least I hope you guys are implementing it in your trading business. But here in the Top Trader, family, we really like to make sure that we know exactly what went on this week and really dig deeper into what drove markets. Because again, whatever drove markets this week may have a propensity to drive markets next week as well. Okay. So let's switch over into the screen view, and let's just get right into it. So as you guys know, we first want to take a look at our currency indexes. That's going to give us a lot of clarity into what actually happened in a specific currency pair. Now, what's interesting is if you guys were watching some of the live streams that we had earlier this week and even last week, we mentioned that the Nzd, the JPY, and the Euro USD, those are specific pairs that we were really paying a lot of attention to. And we were really hoping for risk appetite to increase, which would drive those pairs in, said direction. We'll go over that in just a second here. All right. So let's see what we got. Got a lot of duplication. So first things first, let's take a look at the Nzd. So here's our Nzd Jpy, right? So Nzd Jpy, again, was a position that we've been calling out for quite some time. We were looking for a break of this here consolidation. Let me know if you guys were listening in or if you guys saw those calls where we mentioned the Nzd. We were looking at those positions much earlier before they actually started to see a break here in markets. So let me know if any of you guys are actually exposing any of those positions. But as you guys can see here, we did end up breaking that consolidation. Now, what's interesting is, think about it, right? If you guys notice back here since March, we have not been able to break above 65 mids specifically, right? And so for us to finally break above the 65 mids, we really have to ask ourselves, what has just changed? What underlying sentiment has just changed in markets? And what's easy, right? This is why this game is so easy. If you play it the right way, what's easy is to assert that, hey, look, if coronavirus claims are, weighing down a bit, right? And if this initial drive sell side that we see here on the Nzd Jpy was caused because of the coronavirus, we should start to see markets turn back around. This is why paying attention to the fundamentals are so important. And this is why we're always going to rail on them no matter what. Okay. And I'm also here to ask if you guys have any questions, I'm here for that as well. Okay. So if we take a look here, Nzd Jpy, we are holding the highs. Let's go to a 4-hour view real quick, you guys can see we're consolidated, on our smaller time frames, and that's not too big of a deal, right? We know that Fridays tend to have a little bit of a lower volatility. Same thing with Thursdays as well. They can usually be a little bit lower on the volatility side, and so what we're really looking to see here, right, is to see this market really hold this bottom price level over into the weekend, right? We're probably not going to break lower than this, by close today. But when that Sunday opens up, we want to see markets at least hold this level. And worst case scenario, could we break this low here? 100%. We could end up breaking that low, right? And so if we break that low, yeah, that does push us sell side, and that does give us, a little bit of risk down to really anywhere within side of this consolidation, but it could probably push us down to the 64s. So is there a risk of holding over the weekend, so to speak? I don't really think there's risk of holding over the weekend. I don't see this market gapping in any capacity, but what there is risk is basically going into next week. We have to pay attention, right? And what we need to be paying attention to right now is the 6640s, 66 really mids. If we get a break there of 66 mids, we will go back down to the nearest structural level that is significant. And if we take a look at that and what that looks like on a daily time frame, you guys can really notice that it is right around that 65 mid. So around 100 pip drop sell side is what you're up against in case the trade doesn't actually play out the way we want it to. What we need to take a look at, though, is we need to really take a look and really see exactly what moved. Right, we know we wanted the Nzd Jpy to the upside. Okay, we put out a snippet. If you guys weren't there for us calling out the Nzd Jpy, you can head over to our Instagram. We put out a snippet of us mentioning it last week, and then we added a little bit of a compilation to give you guys an idea of how it progressed. I'll put the Instagram in the description in just a second, but it's just top.traders on Instagram. We need to take a look and see exactly what moved here. Was it the Nzd that moved? Was it the JPY? Let's take a look, because the interesting thing is, as you guys know, right, if we can take a look and see that the Nzd is performing well, which is what we wanted, and the JPY not performing well, then we know we had a little bit of economic divergence there, which is the key play that we really want to take advantage of here. So let's head over and take a look here, right, at the Nzd index. Here we go. All right, pretty simple right here in TradingView. So this is our Nzd index. This is the Nzd relative to everything else. And what you guys notice is the Nzd had an amazing week. A lot of the guys that were inside of this Nzd Jpy were really excited because at one point, if you really look at it, the Nzd was tremendously strong this week. It did have a slight pullback, but then also when you look at the JPY is still at its lows. Okay, so let's take a look here. So we did just see a pullback on the Nzd Jpy, right? So here's our Nzd Jpy. Very, very slight pullback, still inside of the consolidation here, right? There you go, still inside of the consolidation. So a very slight pullback off of its highs. Well, we see that came in from the actual Nzd. It did not come in from the JPY. All right. So right now, the JPY play is making a lot of sense, right? There is risk appetite that is lessening. And in what it seems like is there are not a lot of market participants buying into this JPY because, again, if we zoom out a bit, what can you notice? When's the last time we've been outside of this consolidation? We get this massive run to the upside here because of coronavirus, but then slowly but surely we pull back. We consolidate within inside of this range because market participants are saying what? There's not a lot of buyers coming in at these highs. There's not a lot of sellers coming in at these lows. So sellers don't have a good reason to sell outside of the lows here in the past. And buyers did not have a good reason to buy that they could substantiate, sustain, and sit on. So what has changed though? Sellers are having a good reason to sell when it comes to the JPY, right? Sellers are having a good reason to sell, and sellers are holding those positions a little bit more than they were before because we get to see here that there is either less buying activity or a lot more selling activity going on, right? And so unless you have level 2, you don't really know exactly what's going on, but your market can move sell side for two reasons. Either a bunch of sellers came in or there's a lack of buy side and just a few massive sellers just spike the market down. And this is a conversation about liquidity and a conversation about understanding how markets function. COT sentiments. Yeah, I definitely have looked into the COT sentiments 100%. But George, he knows, he's with us a lot in the lives and he knows exactly what, he's talking about. And George, if you want to send anybody some of those references to the COTs, go for it, man. So yeah, 100%, 100%. Oh yeah, guys, new setup, by the way. So we're streaming nice and clear. All right. We shouldn't have any kind of latency. We're tethered right into the fiber. All right. We were on Wi-Fi before. I can't even believe it was even working. But we tethered in. So that's why things are so clear. I'm also doing a better job at speaking. I'm trying to be a little bit more clear is what I'm saying and not ramble so much. I'm a rambler. All right, guys, we have the JPY folks over here selling a bit and they're maintaining those sell side positions because of risk sentiment. Okay, so we have to ask ourselves the question, all right, what do we look to see next week? Okay, I'll switch over to the other view since we're going to go into a little bit of a spiel. All right, so we have to ask ourselves the question, what do we look to see here on the JPY? All right, yes, we do have sell side coming in at the moment and they're maintaining those lows. Okay, but are they going to sustain, right? So if we pull over into next week, we really want to ask ourselves what could cause people to want to start buying back into this JPY, right? We're going to take a quick look over here at the equities and take a look at the S&P 500 real fast. And if we see anything on that end that, could maybe cause us, a little dismay on continuing to buy this Japanese yen, then sure, again, we might be at even more risk of holding the Nzd Jpy. But as I see it right now, I don't really get a glimpse of a tremendous amount of buy-side participants for the Japanese yen coming in strong, excited, and willing to start killing it on the Japanese yen. I mean, in a long-term view, over the next 2 weeks, over the next 3 weeks, would it not surprise us if we see the Japanese yen, we'll switch back over to the screen here, would it not surprise us if we see the Japanese yen actually pulling back down into these lows a bit, right? And so if we want to draw up the actual technicals on it, right? Pulling back down into these lows, I mean, that's going to be really interesting, right? Let's draw up a fib real fast just to see exactly where we stand. Sometimes I like to go all the way up into the wick, but for right now, we'll go to the body and you guys will see that we're at the 50% fib. 1 second. How do you guys go about managing risks? Service in account, place down stops. Okay, so Mac asked a question. How do you guys go about managing risk? Do you risk a certain percentage of the account and place stops under recent lows? Or do you have a different way of doing things? Thanks. I'm gonna read that one more time, Matt. How do you guys go about managing risk? Okay, so I'll just ask to answer the first question, managing risk. So Mac, when it comes to managing risk, what we like to think about is every single price level is risk, right? So when we hit a consolidated low, right there is risk, right? So let's say again, we were talking about last week how, hey guys, it is risky to be selling right now at these Japanese lows. All right, so here, let me pull back a bit and I'll zoom in. Okay, so before we saw this tremendous amount of sell side here on this specific candle, that's our May 26th candle, right? Before we had that come in, we were actually around this area on the Japanese yen. And so what we were talking about at that point was, hey guys, there is risk selling down here at these lows. And when it comes to executing a sell side position on the Japanese yen, just understand that if we start to see any kind of up move, it makes a lot of sense, right? There's a timing element to what we're experiencing right now. And we're just hoping that risk sentiment starts to come on in. And the early signs that we saw that the Japanese yen may start to break sell side here, which it ended up doing, was what we saw actually on the actual S&P 500. And then Mac, if you just give me a sec, I'm going to answer your question. But, we start at the top of what the actual trade idea is here, right? So if you guys take a look, you can notice that on the S&P 500, we saw a tremendous amount of stability. Okay, here's our daily, right? So we saw markets trading to the upside. We hit off on the 61.8. We pulled back, but notice markets were actually able to sustain the range, right? And then we ended up getting another retest of the high. And not only did we get that retest of the high, we also had news come out, right? So this shaded area here, that was actually the Fed, not the Fed, but the Congress and the Senate mentioning that, hey, it's likely that we're going to pass another stimulus bill. And that just got market participants extremely excited that we're about to see another wave of up move and another just tranche of trillions of dollars flowing into the economy to help sustain and maintain what we are experiencing right now in regards to the coronavirus. All right. So we saw a tremendous amount of market participants pushing this index to the upside. And then eventually we broke. Now, again, if we pull back over and if we take a look at the Japanese yen, what you guys will notice is there was a little bit of a lag there. The S&P 500 was reacting quicker than the Japanese yen, obviously, right, to the news that the stimulus was going to come out. And we knew that was going to eventually have some resonating effects over in the overall global economy, which is why we started to see what markets pull back here on the Japanese yen. And if you don't believe me, that one instance caused markets to, again, drive risk appetite to the upside, well, then we also can just go look at something that's highly correlated to the Japanese yen, which is the Swiss franc. And then if we see the Swiss franc, again, within that same time span, now the Swiss franc has had a little bit of an up move based off of some economic data. But if you guys look, these 3 days here where we saw markets push sell side was correlated back over to that same announcement. And if we look over here to the dollar, you can see that the dollar was highly correlated to that announcement as well, where we see tremendous sell side. So long story short, we started to lessen the idea that this was going to be a more riskier trade based off of what we were seeing on in the actual economy, so to speak. So that immediately sets our risk, right? That immediately lowers the risk for us in regards to us getting in on the low here on the Japanese yen and having a potential bounce and seeing markets push to the upside. Now, let's say that we ended up inadvertently getting in on a market that was not going to push sell side. This is going to be the answer to your question. I'm long-winded. I'm sorry. Let's say that we inadvertently got in on this potential opportunity here for the JPY to push sell side and actually ended up pushing to the upside. Then we would manage our risk like how you logically would, right? Where we would try to rationalize where we could place stops that would help us understand that, hey, look, we understand markets are volatile. We want to place stops in accordance to that volatility, but also in accordance to structure. But what that means is there's 2 things. Volatility is an enormous factor when it comes to setting stops. And obviously your structures are an enormous factor when it comes to setting stops. If you are in a highly volatile market and you have stops that align to structures, but the volatility has changed, guess what's going to happen? You're going to get whipped out. And one of the things that traders like to do, new traders, they like to undermine volatility. And what ends up happening is they set their stops way too tight and they don't account for the excess amount of motion that the market is currently in. Okay, so when it comes to assessing risk, like you asked, we really like to, one, take a look at volatility. How do we calculate volatility? We look at ATR. And then not only that, we then like to go and then also, take into account what we see happening in regards to the structure. And so it's not as cut and dry as, hey, we're coming in off of this low. We want to place our stops way above this structure here. No, that'd be hundreds and hundreds and maybe 1,000 pip stops, right? So that is where we have to play the game of, okay, well, how close can we move our stops? Give the market its room to breathe, but allow for some pullback because, again, we're not going to be perfect on timing. We're not going to get in the market and then immediately starts flowing in our direction, right? So we're going to get in. We're going to hope we are in the market in a manner that, hey, eventually this trade is about to play itself out based on all the factors we see right now. But we want to give it some time, and that may allow for a certain amount of drawdown. But we cannot let that drawdown put us in a position to where, hey, it's, this trade or this whole, market structure is literally going the opposite way. So it's definitely a game you have to play, one where you really want to allow for volatility to take its course in the market to play its game because timing is never going to be perfect. Okay. But then also you want to take into account the structures there as well. And so in so many words, yeah, we're very similar in how you mentioned it in regards to how we manage risk. But there's a few extra concerns that we always have. And then one, of course, being volatility, a few more as well, but one being volatility specifically that we like to take into account. Let's see. I agree with your bias on the direction. There have been a lot of short orders, but new positions are still positive. Right. I agree, George. When trading fundamentals, is it important to factor in your trading ideas based on the currency's monetary policy? No, it actually isn't. So when you talk about monetary policy, right, how much has the U.S. monetary policy changed over the past, let's just say 6 months, right? Yeah, we did lower rates, right, to account for, what we see happening and again with Corona. But at the end of the day, that's not the real reason why markets, really, took a turn for the worse, so to speak. The dollar taking a turn for, the best when it came to that up move. Monetary policy wasn't the catalyst. Okay. So remember, when it comes to rationalizing any type of motion in markets, okay, you want to always put it into 2 contexts, trade flows and capital flows. How much is monetary policy really going to affect trade capital flow in a very minute basis, on a week by week basis, right? So if we're trying to rationalize what we want to do with the euro, with the euro, and we know the euro can have, its flows can be up 400 points, down 800 points. I mean, it's going to move based on what's happening in the world. The monetary policy is pretty stagnant. Those meeting minutes happen on a very, very irregular basis, and these currencies are still moving all over the place. So we don't really like to set monetary policy as our baseline of, hey, what we want to do with the currency. Oh, monetary policy is looking pretty bullish. We should start to see the dollar strengthen because interest rates are higher. Yeah, I don't really care, because there's so many motions, there's so many times where you see interest rates go up and the currency actually doesn't end up doing anything. It's quite interesting. So yeah, no, not too much playing monetary policy into account. Does the VIX play in the Asian market? So volatility index has factors all over, right? Of course, VIX has its enormous factors in the US, options pricing, so on and so forth. You can rationalize that the VIX, and when you get a higher VIX, you're going to start to see, the Japanese yen potentially start to increase in value. That's something that you could probably rationalize. Pretty cut and dry there, right? The more volatility, the more risk. You may start to see people pull away from that risk to, preserve capital. That's what these markets are really for, right? The markets are here for speculation, but at the end of the day, people are really trying to, preserve their capital, because at the end of the day, when you make a tremendous amount of money, you don't want your money just sitting in some random old bank account, right? I mean, when you really make a lot of money, eventually you have to have that money stored in some asset. You don't want it just sitting there. But you also don't want to just keep going about taking large risk, in business ventures, right? So let's say you end up having some liquidation of, a business that you sell for $50 million. You don't want to go invest all that money back into a new business. No, you probably want to take maybe about $5 million bucks, put it into a new project. But that other $45 million, where's it going to go? Right? Where's it going to go? I mean, it obviously has to go somewhere, and you're not going to just have it sitting in one single account. You're probably going to put it in some index, diversify it across certain funds and certain asset classes to, again, give you some type of flow, strategic flow that allows you to make, income and just have a little bit more growth to the actual, to the capital, because we know inflation is real. And at those highest levels, 45 million bucks, you really see inflation a lot more, it's a lot more volatile on those highest levels. What do I think of GBP JPY? Let's take a look at GBP JPY real quick. GBP JPY is already here. So we first need to just talk about what do I think about GBP. We can ignore JPY because we already know what I want to do with the JPY. I wanted to go short. I would like to see JPY continue sell side down to these lows. As again, this is our JPY index, so you don't really get to see the correct pricing. It kind of gets all crazy when you look at the Japanese yen relative to everything else. But so we can take a look real quick at the GBP. I haven't done so much research on the GBP, right? I haven't done so much research on the GBP, but what I can imagine is if we start to again see markets start to calm down a bit, I probably could start to see the pound increase in value. So that right there, guys, might cause our GBP JPY to continue to break sell side. I do like the structure here. Now that I look at the GBP, this is the pound index again. I do like the structure that I see here on the pound index. It's really consolidating at its lows. And so hopefully that's encouraging and we start to see a little bit more buy side pressure coming on in. Again, because there's maybe less risk happening in markets overall. As we saw this week, the USD was weak against the major currencies except the CAD, which was the reason for US weakness. What was the reason for US weakness? USD CAD weakness correlates with oil. Let's take a look at the Canadian dollar real quick here. So you do have Canadian dollar. Man, take a look at this CAD, man. It's been really ugly since March. It's extremely, extremely ugly. Maybe if you were trying to go long, early May. So May 1st, if you had a long idea on the CAD, well then if you're able to stick it out and kind of take on some of the volatility, maybe you did pretty good. US and China tensions, we'll take a look at that in just a second. You maybe did good, but if you're trying to day trade Canada in any capacity in and out, you probably got burned pretty badly because of the amount of volatility that we see here. Just notice this, right? So you get an up move. Look how heavily retraced all of these up moves are here for the Canadian dollar. And this type of volatility is extremely hard to trade. And this is what you guys want to understand is that market conditions can be easy to trade. Market conditions can be hard to trade. If anybody tells you that, every market condition is easy, they don't know what they're talking about. Because I can show you market conditions where, a child, an ape with a Nokia fucking whatever could just buy the currency and just kill it. You know, go take a look. Let's take a look real quick at the Euro USD. Let's see, pull back, and let's head over to 2014. You know, this was one of the highlights of, you know, a lot of traders' lives, this period in time right here. Because notice this, right? It doesn't look very significant. It's actually quite interesting, right? Where you see 139, the Euro USD is trading at. Look how easily and how flowy we ran down to 105. Guys, you haven't seen market conditions like this in a very long time. And it's really the staple of where I always go back to, where I say, hey, look, the market's pretty, look, you can have a solid year and a half, 2 years of extremely high trading performance based strictly off the market just doing this. Look at the amount of retracements. Let's see the largest retracements in this entire down move. Okay, so you have one retracement right here. All right, but then you literally go a solid 6 months without another retracement, and then you get a smaller retracement, but then you go another 4 or 5 months, right? And then you get you wouldn't even barely call that a retracement, and then you go another almost a entire 4 months of just pure sell side. Okay, so if you can just either wait for good opportunities, wait for flow, not like this. You won't get flow like this unless you get just a massive shift in the economy. If anybody knows why we saw such a tremendous sell side move on the Euro USD in 2014, April, all the way till March 15th, I will give you a cool little Friday prize gift or deal. I don't know what I'm going to do, but if anybody can figure it out in the next 5 minutes, tell me exactly why markets move sell side, we'll give you a little prize. I don't know what it is. Probably some cash. I don't know. Just let me know what your Zelle or Cash App is. But yeah, you know, it's very, very interesting stuff. You saw that happen again a bit in 2018, where we saw markets pushing sell side here. I'll tell you what happened here. Draghi mentioned that he was really afraid that the euro was, you know, the euro at 125. He literally said it. Go look it up. Euro at 125. I don't like it. So when you're ahead of your central bank says something like that, guys, you're going to run outside of that structural area. Pretty interesting stuff. Okay. You guys got 4 minutes, by the way. So yeah, GBP JPY, I like that, back to the upside. The Canadian dollar, like we always like to say, the Canadian dollar has a mix. It can sometimes be correlated with oil, man. And sometimes, dude, I'm telling you, it cannot be correlated with oil in so many words. And then, you know, that's really the biggest problem. But even outside of that, just take a look at the massive amount of volatility that we have here. This will whip out any trader, you know, and unless you're accounting for these pullbacks in some capacity, you're going to have some type of massively positive P&L, and then it's going to erode, and you're going to think, damn, I guess I didn't time it right. And then the market is going to run back up, and you're going to be like, okay, maybe I did. And then you're going to say, well, I'm telling you, man, these things can be pretty crazy, and you just really want to, people really undermine market conditions to a really high capacity, and I'm constantly trying to monitor them in some capacity. David Cameron nudged Britain towards the European Union door, marketed exit. George mentions that is the reason that we saw the Euro USD pouring sell side in 2014. George mentions it's because David Cameron nudged Britain towards the European Union door. All right. So if we got somebody else that has an idea, we will wait it out. We will wait it out and we will take a look. So yeah, if you guys got any other questions, let me know here. Again, Friday market recap. We're just really trying to see exactly what went on this week. Let's talk about the Euro USD. If you guys go back and watch some of the other live streams, 2 minutes until we get there, until we say if my man George was right or not. All the signs are it will get worse yet the next year and up until 2017 at least. If you guys were watching some of the live streams last week, you guys will know that we were looking at Euro USD and Nzd Jpy. Those are the only two pairs that we were really paying attention to. Euro USD is now screaming to the upside, something that we really wanted to see play out. So we were looking at markets right around this consolidated low. This is what they were looking like about. And we were really just waiting to see, again, if we get that dollar, if we get a little bit more of that dollar weakness. Let's take a look at our dollar real quick here, dollar index. And as you guys can see on the dollar index, what ended up happening, our dollar index screams sell side. Risk appetite is increasing. All right, so that ended up working out. And then also here on the Euro index, take a look at the Euro index. Massive run up to the upside on the Euro index. We saw a tremendous amount of suffering and fear and insanity when it came to what was happening in Spain and Italy. We have to account for that to be a reason that we see the euro pushing back to the upside. EU was still losing money after the recession and bailout. Black Wall Street. Black Wall Street says the European Union was still losing money after the recession and bailout. All right. One of you guys are going to win a free trip to Chipotle. I don't know who it is, but somebody. I'm just kidding. We'll figure out what it is. We'll give it about 30 or 40 more seconds, and then we'll dig a little bit deeper. Euro USD though, notice that, guys. So what do you guys want to see with the with the euro? This is not the Euro USD. This is the euro here. The euro index. What do you guys want to see here with the euro? You know, do you guys think that we'll continue breaking to the upside? Again, our opinion was that we were going to break outside of this consolidation, and that's now what we're seeing. And so we're still riding that wave. You know, we're still riding that wave, and we would like to see the euro index probably at least touch this structure. And you guys will be able to come back here Monday, 9:30. All right, to kind of see exactly what went down. Let's take a look at the Euro USD and kind of see exactly what we want to do with the Euro USD. With guac, with guacamole, man. All right, so let's pull out a bit. Let's go to the weekly. Euro USD on the daily looks a little crazy, man. Holy cow. So there we go. That looks a little bit better there. Currency war in 2014. I need a little bit more, give me a little bit something else. What was currency war? You know, what was happening there? I guess you're saying like a power grab, more or less. You're basically saying that, you know, the dollar wanted to either do this while the euro wanted to do that, and they were combating each other. I get what you're saying. There was actually a currency war in 2014. I will say that there was a currency war in 2014, but it was not with the euro. And it was not with the dollar. All right, so we'll get into it real quick. Let me just do some quick analysis here on this Euro USD. We would still like to see Euro USD inside of the $13s. Pretty simple stuff here inside of the $13s. Let's look and see what this looks like from a Fibonacci point of view to give us some perspective. And if we got some perspective, boom, we're at the 23.6, and we could run to the 38.2. Pretty simple, pretty simple. So in our opinion, over the next few weeks or so, we could see the Euro USD run to 38.2. That's the most likely outcome in our opinion. And we're just waiting to see for that to play out. The fantastic part about it is, look how enormous this candle was for the Euro USD back to the upside. You know what happened there, folks? Do I even have to tell you? Economic divergence, guys. You have euro running buy side, you got dollar running sell side. All right, you got them both going in completely opposite directions. Hey, I didn't invent it, man. I'm just the messenger. All right, you guys do with it what you want. But if you're not playing the game, then what are you doing? Okay, what are you doing? This is the way you got to make things happen here, because it's just the best way to really, stay alive in a market as insane as this. You got to take every edge and really hold it into and really grab onto it and don't let it go. And economic divergence is one of the largest. So yeah, we would like to see that bad boy run back up into the 13 mids, maybe the 14 flats. 111.23 level looks interesting on EU. 111.23, 111. Where are we looking at? 111.23. Oh yeah, that's a solid level for sure, man. That's right at that's really right around, it's a zone really, right? We don't like to draw up too many like just straight up levels, right? This market's way too dynamic. You draw one level and you'll have a million different candlesticks breaking it, and you don't even realize you won't even really understand what the hell you're doing because you're just trying to have this really specific level. But with a zone, it really saves you. And definitely that is inside of that area, 1123, 100%, my man. So what happened on the Euro USD in 2014? Let's take a quick look real quick. So let's just go to it. There we go. There's 2014. Okay, we were at the high here, 139. We ran all the way down to 104. That is 3,500 pips. That happened in the span of about 11 months, 11 to 12 months. We had a 3,500 pip move. From a percentage basis, that's enormous. Think about if you're a European company and you have a tremendous amount of exports going into the US, and a year later, you're having to pay literally a 30% premium on all of your products. Whether you're buying, let's say you're buying products out of the US, you're having to pay a 30% premium in just 11 months. Guys, if you're a business that has, massive operations where maybe you have $100 million of costs that come out of the US, yeah, congratulations, you now have $130 million of cost. How can these businesses avoid that type of, situation? Futures. Currency futures actually allow you to hedge risk in that capacity. And that's what currency futures are for. That's why the swap market is so big. Forex swaps is bigger than Forex spot. Forex spot is what we're doing here, trading cash. Forex swaps is enormous because that's what companies are doing. They're actually trying to hedge their risk and hedge their currency risk by buying these contracts years and years out, basically saying, or months and months out, basically saying, hey, I want to continue to buy the dollar at this price. Is that okay? And whatever broker or whatever counterparty is saying, yeah, that's fine. Boom, that's the deal you make. Okay, so anyway, that's massive, right? And then it's vice versa, right? So if you're in the US and you're buying products outside of Europe, you have a 30% discount. How awesome is that? $100 million now becomes $70 million of costs at scale, right? So that's awesome. All right, now what do we need to do first, guys? We need to isolate both of the currencies. Let's take a look at the euro and see what was happening to the euro in 2014. Massive amount of sell side here. Let's see. So euro in 2014, around April, you see a tremendous down move. How significant is that down move, though, in retrospect? It seems quite significant. Let's go take a look at the dollar and see what exactly happened to the dollar in that same time frame. To give you some perspective, though, on this move, because it's kind of hard, right? It's like, okay, Cleveland, is that a big move? Is it a small move? I know we're on a weekly, so I know it's a pretty sizable move, but I can't really understand, it in context as to right now. Well, here's our coronavirus move right here, right? So this is our coronavirus stuff happening, okay? So that's coronavirus, all right? And so what you have over here, though, is, I guess, coronavirus on, steroids that maybe took, a little bit longer, a solid year, to pan out. Let's go over to the dollar and take a look and see at what happened to the dollar in 2014. Holy cow, there we go. Take a look at that. 2014, August 2014, around the time we saw that massive move on the Euro USD, all the way to when end of November. So the dollar kept moving quite massively. So what happened here, guys, is the US, they actually stopped quantitative easing. Okay, so they actually stopped printing money. So from 2010 all the way to 2014, the US was actually printing money to get out of the recession. Let's go take a look and see it. So we're going to head over to trading economics. We're going to go to countries. We're then going to go to United States. And then let's go take a look at the money supply real quick. Because if we go take a look at the money supply, then we'll get an idea as to how much money was being printed, so on and so forth. And then you're going to see them stop printing money. And when they stop printing money, you're going to see a massive rise in the dollar. Okay, pretty interesting stuff here. All right, so let's see. Let's just go to the inflation rate, and then we'll just head over here to money. So money. So we need to go to money supply, MO money. If you guys don't know what this stuff is, this is why we have the academy. You have to understand this information to be able to really understand exactly how markets function. It's extremely important. So take a look, folks. What do we have? What do we have here? Let's see. Okay, so we have 2014. You have a massive amount of stimulus, a massive amount of capital being printed right after what? Here's 2008 crash, and then you have a massive rise up until 2015. Right around 2015, you had markets really slowing down. All right, and so if we go take a look at the dollar, what do we have? So you have a tremendous amount of just really consolidation, not a tremendous amount of price movement here, but right around the time, early 2014, middle 2014, really, about summertime, you had markets screaming to the upside. I mean, they were really moving. What happened? Why did it start to gain so much traction there, right? Well, guys, it was because Janet Yellen mentioned in summer, 6 months before they actually made it happen, she mentioned in the summertime that, hey, guys, we're about to stop printing all of this money. Guys, this is literally money on the balance sheet, okay? This rise is literally more capital on the balance sheet. Look at what just happened with coronavirus, by the way, with all these stimulus checks, right? You see all the stimulus that just came in, a massive spike. You notice what was happening here. They were letting bonds mature. I mean, this is pretty, I don't ever go this deep on the channel, but there's a lot of information behind the scenes that's happening that if you guys pay attention to, you will know exactly what is happening in this economy and how to play that when it comes to the currency. You'll realize it's honestly a lot easier to play the currencies, let it ride out, and eventually it usually works itself out because look what's happening. It's pretty interesting stuff. It's pretty interesting stuff. Here, I'm going to show that for George there. So bam, so there you go. That's what happened to the dollar. And what happened to the euro? Why did the euro fall so sharply? During that same time, the euro actually started their QE program around that time. So around the time the dollar was turning off its program, the euro was a little late and they started their program. Pretty interesting stuff. Okay, here, let's take a look real quick. Euro area. If we go to euro area and we head over to their money supply, 25 years out. Holy cow, look at that. When do you see that inflection in their money supply? Notice that the euro has been printing money and the money supply has been increasing dramatically since its inception, 1996. But look at the massive inflection point that you see here. You can't really tell. The perspective is kind of hard to read. But you see a massive amount of, you see a more exponential increase in capital flow, capital creation, money creation in the euro during that time. All right. So interesting stuff, guys. Let's do a good job of paying attention to this kind of information in the week ahead. And you guys won't be out of the know, and you guys really won't be that convoluted in regards to what is actually happening in markets, and you'll be able to take very, very actionable positions. We want to see the Euro USD touch on the 113s. That will be something exciting to see. Boom, boom, boom. There we go. We want to see that happen. And if we see that happen, then fantastic. But then also we would like to continue to see the Nzd Jpy pushing sell side. All right. So if you guys got any questions, let me know. That's our recap. It's pretty simple stuff. I will be there. You guys can also email me, cleveland@toptradersfx.com. If you guys got any questions, if you guys want to learn a little bit more about fundamentals and just have an overall place where you can have all this information in one fellow swoop with a tremendous amount of case studies as well, you can head over into the academy, fill out the application, and then one of our senior traders will give you a call and see if you qualify to be inside of the academy. All right. Real quick, let's just run through it real fast. Aussie dollar. Aussie dollar looks like it's pulling back up in structure. We know what the Canadian dollar is looking like. Very, very choppy, very, very consolidated, a very hard market to trade, no matter what anybody tells you. All right, stuff is hard, stuff is easy. It's okay to be a little bit confused sometimes and kind of just sit on your hands. All right, euro, easy market to trade right now. Notice not a tremendous amount of volatility. NZD as well. I also think NZD is a fairly playable game to get involved in. Swiss franc. I haven't really touched Swiss franc. It reacts, but it doesn't react as well as the Japanese yen when it comes to risk appetite. So that's something I'm somewhat staying away from. And we have the British pound. I like the British pound. So whoever was talking about the British pound versus the JPY, it does look like something that is going to be interesting. And I am going to do a little bit more research in the GBP this weekend and give you guys some more information on it on Monday, because I really do like the structure to the upside, especially if we're starting to see a little bit more risk come out of the marketplace. And then dollar, hey man, let's see this dollar continue to shoot sell side. Japanese yen, same, but different. All right, guys, look, if you have any questions for me, let me know. Head over to cleveland@toptradersfx.com. Get inside of that academy if you guys have any questions. I'll be here Monday, 9:30. Nice stream. I loved it. All right, if you guys have any questions for me, man, let me know. I'll talk to you guys soon.